there's been a lot of geniuses over the last 2 years flipping houses because it just kept working out because the market just keeps going like this. It's a lot easier for the numbers to work out. So even when you estimated 70 grand in repairs, it ended up being 90. Well, we sold the house for $40,000 more than we even thought we possibly could.
This is the Basu Lifestyle Show, the show about learning what it takes to build a superior you, mentally, physically, and financially. Be sure to like the video and subscribe to the channel. And also check out BasuLifestyle.com to purchase merchandise to support the Basu Lifestyle. Today I'm joined by Sam Corona. Sam Corona has been in the mortgage industry for over 30 years and has been investing in real estate for over 20 years. So Sam, thank you for sharing your time with us today.
Thank you for having me.
So how and why did you get into real estate? Let's go back.
Well, I was a finance and engineering major at West Virginia University a long time ago. Graduated there in '92 and kind of stumbled into the mortgage business like most people do. And then eventually, I believe in investing in what you know. So eventually I got into real estate investing.
You started seeing kind of like people making deals, making money. You said, I can do that.
Exactly right.
So what do you like more? Do you like mortgages or do you like the real estate part of it? What kind of gets you going?
I think you already know the answer to that question. At this stage with where the mortgage business is, I certainly prefer real estate investing.
Okay. So let's talk about your first investment property. How did that go? What was it like? What did it look like?
I bought a little condo in Wilmington, Delaware from a kid that was working for me at the time when I used to own a mortgage company in Marlton. And he was really kind of looking to unload it because he wanted to buy like a house. I think he wasn't getting married, but it was something along those lines. And he was like, hey, would you take this off my hands? So I looked into it. It was just a little studio in a 10-story building in Wilmington. And I ended up buying that one from him, and a couple of years later it was going pretty well. So I bought another one in the building. I got friendly with the management and all that type of stuff. So I bought another one, and those two turned out to be great investments. I mean, they kind of managed most of the stuff for me, so it made it pretty easy. And then all we'd have to do is take care of it when we did a turn.
Okay. So you don't mind having like an HOA and property managers. I know some people like kind of want to stay away from like HOAs because then you kind of have to pay more in fees and they have some control and they can kind of determine sometimes if you can rent or they can change the rules and not let you rent at times.
Sure. I would say in general, yeah, my preference would be not to, but I also prefer looking more at multifamilies and stuff. But that's how I got started. They turned out to be great properties, sold them for probably almost twice what I paid for them. So I wouldn't say, don't do it. But you're right, oftentimes the numbers can be tricky trying to do, buy a
because you got to kind of add all of that in and make sure you're still going to make some money because sometimes those fees add up. And then on top of that, they go up every year a lot of times too.
Yeah, well, they constantly have other factors influencing them, whether, if they got sued or if they had a problem, so they need to do major work, whether it's a pool or roof or whatever it may be. And the next thing you know, your $170 a month HOA fee is now pushing 3 bills. And you're like, all right, well, these numbers are not working for me anymore.
So have you done flips too, or you just stick to?
Yeah, I have a partner that I do most of this stuff with. We've done just a couple of flips, and just by chance, I think I'm actually signing a contract tonight for one.
Okay.
But it's not my primary focus, and to me, the last couple of years is tough to really justify flipping. I mean, I know there's plenty of guys doing it. I think if you're a contractor, it makes all the sense in the world. If you're just a mortgage guy or a real estate investor, like us perhaps. I think it's a little bit tougher because that's not really my forte. I mean, I like to buy and hold stuff. We kind of treat them like flips, so we look to buy them low where they need work, rehab them, but then we like to hold them and rent them out and all take advantage of all the stuff after that.
Now, how will you buy them? Will you buy them like cash, fix them up, then refinance, or are you buying it financed with like a deal?
So most of the time, I have bought them with construction loans from banks.
Okay.
So if you're well qualified and you know what you're doing, you can get a construction loan from a bank, no different essentially than getting a hard money loan, where they literally lend you the money not just to purchase the property, but also to do the rehab work. And you do take draws, and when it's done, you end up with a permanent loan.
Now, I've heard of people saying that they'll have to check up on your work and all that. Is that happen or not when you're an investor? I know if it's a personal person who buys it and gets a construction loan, a lot of times they kind of have speculations and have to meet certain criteria, where if you're an investor, do you basically, this is how much I need, this is how much I need for the rehab, and they just give you the money because you've done it before?
They do draw inspections, for
Okay.
sure, but not a big deal.
Okay.
For the most part, you kind of tell them, look, we're going to finish this much stuff in phase one, this much stuff in phase two, and phase three will be the final. And as long as you basically have adhered to those things, they advance the money.
Now, is the reason you don't want to do cash because you don't want to put your money into it, or just is there a reason why you do the construction loan compared to cash to save that interest rate?
Yeah, the biggest reason is saving on cost, but also, well, I should say really the biggest reason is if you're doing more than one thing at one time. If you do everything for cash, how many projects can you do at once? It's one thing if if you got a bunch of people that you're pulling money together and you got a few $1,000,000 to invest. But if you're the average person and you say, look, I got 100 grand, 200 grand, maybe even 300 or 400 grand, you're still not going to, take on too many projects at one time.
Okay, yeah. So it makes sense. Do you know what loan I'm talking about? What loan is it where if somebody's looking to buy as their primary residence, they can get like a construction loan built into their mortgage? Do you know
So there's several. So
Okay.
you have FHA, 203K, which
Yep.
is probably the most popular one. Everybody calls it just a K or 203K loan. Although what's become more popular recently, because there's just not a lot of FHA business getting done in this competitive market, is Fannie Home style, which is just a conventional construction loan, if you will, or conventional rehabilitation loan.
I've never done one, but have you worked with anybody who's done one and actually
Done one.
is it pretty easy? It's smooth as long
Yeah.
as they know what they're doing.
I mean, the basic criteria are you got to have a general contractor that's licensed and insured. You can't typically self GC. And it's an awesome way to buy property. As a matter of fact, I recommend it all the time. Again, in this competitive market, I tell people, look, if you're looking to get any kind of a deal, you're not going to get a steal, but if you're looking to get any kind of a deal, don't go for the cream puff that was just completely remodeled, whether it was by the owner or a flipper. Look for the house that's been sitting for a little bit, but it's in the town you want, it's in the neighborhood you want, and then you take on one of these construction loans. It's a little bit more expensive because of the fees and the draws and stuff, but it's not outrageous. And typically, you'll come out of it with equity, with positive equity, because what you end up putting into it, typically it's going to appraise for more.
Exactly. You gotta get creative in this market because number one, the deals are very slim, if at all. And I think like what you were talking about with flipping, I feel like unless you're really, really good at flipping, you're almost speculating that the market's just gonna keep going up. Because I don't see, when I look at them, I look at the purchase price and what I think the ARV is and what it's gonna cost to repair it. And I don't see the money to be made. I feel like they're speculating that real estate always goes up.
I couldn't agree more. I mean, there's been a lot of geniuses over the last 2 years flipping houses because it just kept working out because the market just keeps going like this. It's a lot easier for the numbers to work out. So even when you estimated 70 grand in repairs and ended up being 90, well, we sold the house for $40,000 more than we even thought we possibly could.
And we already blew it up a little bit.
And it's like, well, that's certainly not the norm.
When did it look like that started to you? Because to me, it looked like around 2020, when rates went to zero, is when things went absolutely insane.
Yeah. I mean, obviously that was the beginning of it during COVID with lower interest rates. But it's kind of a little bit after that because what happened is, you had such little activity during COVID that after that, demand had built up and you still had a lack of supply and stuff. So that's what all this is about, is supply and demand. And that's when it really started to take off.
Do you think, so they say it's supply and demand, do you think that the demand, because rates are so high, where is demand going to go now? Like, what are you seeing right now and where things are kind of going to head?
We're still seeing pretty strong demand, especially in the first-time homebuyer segment. Probably not as much once you start getting above 400,000 and 500,000. Not that that's not there, but there's such low inventory that you still may end up in bidding war situations. You just might not have 20, you might have 3 or 4. But because inventory is so low, supply so low.
Yeah, it's just crazy because people are buying like really low entry, like $250,000 houses with FHA financing. So you're getting 7% plus probably points on a house that's up 40% since 2020. Like 40%.
Plus your upfront MIP, which is significant on FHA.
So if there's any drawback in the market, you're already underwater like almost immediately because you have no equity at all.
Exactly right. That's what happened back in 2008 as well. If you don't have a lot of equity and things take a dip, now you're underwater and you start having people default just because, even though they don't have a problem, because nobody wants to keep paying a mortgage where they're.
Yeah, I mean, why would you? I can understand you're working just to pay for this house because you got so far in debt just to get the house, and now you're looking at the house next door selling for half what you paid.
Yeah.
Now,
And that's why in my business we talk about having skin in the game. You know, when you have very little skin in the game, meaning it didn't take you that much to get into the house, especially back then, because we weren't in the market like we're in now, so we were getting seller concessions stuff. So I was putting people in houses back then with $5,000 or $10,000. Now you probably need every bit of 15 or 20,000, just minimum, just to get into a house. So at least you have more skin in the game. But when you don't, and now you're underwater, you're gonna have a high probability of default.
do you think that there's any chance that we have any type of default? Where do you think kind of the market goes? I mean, nobody can predict it, obviously.
Yeah. So we certainly don't have all the financial problems that we had with banks, with securitizations, with crappy loans being made by shady brokers. All that stuff has essentially been weeded out. Not that we don't have any issues with banks, but certainly not the ones that are as deeply rooted as we had back then. So, no doubt if values pull back, you'll probably see, delinquencies and defaults rise, but I don't think it'll be significant. I mean,
Yeah, that's kind of where I'm at. I think unemployment's slowly going to go up. Definitely people are going to lose their jobs. And then if you lose your job, you probably can't pay for your house because you're mortgaged. So you're going to have more supply probably. And then so that's the supply side. The demand side, does demand side go down because less people want to buy because now they're scared a little bit? Or, that's what I'm saying. Where does this supply and demand go?
yeah.
And how big of a correction can we possibly get is kind of...
Yeah, well, right now you got a lot of factors. I mean, you have really high rents as well, right? So you say, okay, well, if rents don't come down, first-time home buyers are still going to be prevalent because you still have a lot of young folks that are making more money, that are coming out of college, whatever it may be. They're going to want to continue to buy houses, and if you have fairly low supply, you're going to still keep prices elevated because of that. But all it takes is a couple of factors to start to swing, and then all of a sudden everything else kind of comes tumbling down.
Yeah, because it seems like it's like a roller coaster, and it just goes one way and then the other way, and it just takes a little bit of time, but it just goes. Because something I heard recently, I'll get your take on it, is that you should buy now because rates are going to come down, and when rates come down, you're going to have more buyers. But why would they lower rates? Because something's getting pretty bad out there.
Exactly. And I keep telling people they're not lowering rates anytime soon. I don't mean like, a year off or whatever, but they were expecting us to lower in March. Well, Powell just came out and basically told you that's not happening because they still don't have inflation tamed. You still have inflation in the mid threes. And the reality is, to me, we should almost be looking for deflation because we're up so much. What are we up, 30% or whatever on average across the board? So just because inflation is getting lower doesn't mean we're good. The reality is prices are all still elevated. So you still have some serious issues with affordability. And then you take all those people that bought houses in the last couple of years that have really high rates, really high mortgage payments, really high cost of living with all, to go to the grocery store, to get work done on your home, by the way, because all that stuff has become really expensive, to buy a car, whatever it be. So as those things continue to happen to you, you're getting squeezed from every angle. And you say, well, how long can that last? Is that sustainable?
That's what I'm saying. If the rates come down, it's because something bad happened. I feel like this area we're at, maybe a little bit lower, down to like 5%, is kind of where they should be in a good economy. We just haven't had.
Yeah, that's what I like to call normalcy. I mean, I think that's where I'd like to get. I don't think we're going to get there as fast as even I would like to, or a lot of people in our business would like to. I think it's going to be a little bit slower and more measured.
Because if it does happen drastically, that's because something's imploding.
It's going bad. Yeah, absolutely. And I don't think most of us expect that. I mean, could it happen? Yeah, but for the most part, I think we expect rates to slowly come down. And they'll come down. I mean, they're already coming down just naturally based upon what's happening in markets and expectations. So it doesn't necessarily take the Fed for mortgage-backed securities and things to come down a little bit. I think they'll slowly come down, just not as fast as we would all like them to. And I know people are predicting 6 or 7 rate. I really don't see that happening. But.
No, I'm completely with you. I think maybe halfway through the year, start bringing it down a little bit, and then maybe a little bit more. But and then with real estate, with that, I feel like we stay flat and maybe go down a few percent here and there. But sadly, it might be like the new normal level.
Yeah. Yeah, and a lot of folks, that know what they're talking about are thinking that prices may actually go up before they do come down because they think with lower rates, you're going to have increased demand and you're still going to have fairly low supply because you still have too many people sitting in 3 and 4% mortgage that are saying, I'm not going anywhere. I'm not, 6.5% is not enough for me to go. I've got 3.25. Versus someone else going, hey, I was looking when they were 7.5 or 8%, so 6.5 is I'm coming in. That's great for me to come in, but that doesn't really matter if supply is still low.
Yeah, it really is going to depend, like we said, on unemployment, where that goes. If there's any, I mean, we're involved in a ton of conflicts all over the world. If something bad happens somewhere that just scares people, another pandemic, whatever you want to call it, it's just kind of, you don't really know. Something like that comes in,
For sure.
obviously it could drop instantly.
Sure. And that can always happen, but like you said, there's a lot of things going on right now where you could very easily see those things happen. I mean, we're dropping bombs today.
That's what I'm saying. Yeah, we're definitely in a spot where there's more bad things that could happen than good things. On top of that, you're in an election year.
Yeah.
So like this year, I've been telling people who've been asking me, unless you find a good deal that looks like you want to live in it, or if somehow it's a good investment and you see that the numbers really work, this year is not a year to buy. Right now, I mean, obviously anything could change tomorrow.
As an investor, you say.
As an investor, as a person moving into a house, unless you feel like you really need to get a house, don't buy a house this year.
Yeah. So, and obviously everybody's situation is different. So I always tell people, look, it depends on what your situation is. If you're, if you're not living at home and you're renting and you're paying, $2,100 a month in rent, and your landlord just told you that as your lease is about to renew, it's going to go to $2,500 a month, it starts to make more and more sense to say, well, then we really should buy. We should not sign on to that for another year because it's just too
I
expensive.
think you might want to find somewhere else to live.
Yeah.
To rent.
Yeah, well, obviously not easy to do either right now. The rental market's just as tough to find as buying a home.
Do you think your personal home is an investment? Right?
Yeah, it's tough to say yes to that. I think for some of us, it has been. If you were smart enough and lucky enough to buy at the right time, there's no doubt it can be, for sure. I just don't think you should ever approach it that way.
No, I mean, if you think about it, it's an emotional decision. Buying a house is completely emotional. So to start with, obviously, nothing that you do emotionally is going to be a good financial decision. So that's to start with. And then on top of that, once you live there, you're always going to over upgrade.
Yeah. Yeah, because then it becomes about what I want, not necessarily what I need or had to have.
Yeah, you're updating the kitchen or you're updating the yard or something. You're like, oh, what's a couple thousand more? What's a couple this more? And next thing you know, you spent more than it's worth. But I don't think it's an investment. But if you want to have a house, you want to be comfortable, you want to enjoy the way you live, as long as you can afford it, great. But just don't think that it's this great investment, because I don't think it's a investment.
Yeah, all the more reason why for years I've told people, I do not recommend throwing extra money at the mortgage. If it makes you sleep better, by all means do it. Maybe if you bought a house in the last couple of years and you say, hey, well, we're trying to aggressively pay it down because when we refi, we're going to be able to get out of MI and we're at a high rate. So yeah, that makes a little bit more sense. But in the long run, typically, I always say, you should be putting money in your 401k, investing, buying other real estate, whatever it may be, not throwing money at the lowest rate and the biggest tax deduction you have. That's the last thing.
Where do you think that break is for your mortgage rate if you got a 30-year mortgage? Somewhere around 5?
Yeah, somewhere in that neighborhood, 5.5.
Because if you invest in like a basic index fund, you're bound to get about 10% is the typical return.
It's 8,
Yeah, say 8, so somewhere around 8. So if you're around 5, it kind of makes sense. Anything under 5, you might as well just invest.
Yeah, well, the other part of that too is liquidity, right? So you could throw an extra $500 at your mortgage every month, or $200, whatever it may be. But once you do that, that money sort of is gone. Like you can't go, my spouse just went out of work, or the car just broke, or I just had a problem at the house or the heater, whatever it may be. Let me pull back that few grand that I've dumped into that over the last year or two. Well, you can't now. It's gone. So to me, I'd rather be taking that money at the very least and buying stocks or putting it into a fund where, hey, if something goes wrong, I know I can tap into it. I know it's there. That makes me sleep better than knowing
without doubt.
my mortgage is a little lower now, bounce, even, so now I only
I'm going to save
28 years instead of 29.
No, absolutely. I agree with you completely. And I had people that I talked to who got in during COVID times who had a under 2% mortgage who were like, oh, I'm going to pay it down. You never, ever, ever want to pay that off. You want to make your last payment in 30 years. You don't even want to make it a month early.
Absolutely.
Get them.
I'd be telling them if they would give it to you for 50 years, take it. Right?
At that,
you should never throw an extra penny at that mortgage.
No, without
Again,
doubt.
we're not telling you go spend all your
No,
money.
invest it. Whatever money you were going to do.
Maxing out your 401k? No. Well, then what are you putting money towards your mortgage for? That should be, rule number one. max out your 401k or whatever you have, or IRAs if you're self-employed, whatever it may be.
But there's always like these little hacks that people like see online, and it's like, oh, I can pay my mortgage off in half the time, and it's like, okay, what is that saving actually doing for you? Like when you could invest it instead, and it'll be compounding for you.
Yeah, I mean, I work with a lot of financial advisors, and I haven't met too many of them that are telling you to do that. You know, it just doesn't make sense in the long run. You're always going to come out ahead.
Yeah, without a doubt. One of the investors I listen to basically says that the 30-year mortgage is actually your asset, not the house or anything like that. If you could get a 30-year mortgage, that's like the greatest thing you can buy right now because you're beating inflation. It's a great investment, and it's set, locked.
Yep.
You don't have to worry about
it. Yep, no doubt. I think there's a lot of people, myself included, that are sitting there looking at their house, and as their kids are getting older or maybe moving out, saying, hey, we were planning on downsizing, we're planning on going here, whatever it may be, and now they're going, man, my mortgage is cheaper than people buying houses for half as much as mine because the rate's so low. Guess we are going to stay here for a little while longer because it just makes sense to.
Yeah, I mean, the only reason you would leave at that point is if you're changing, I guess, states, right, or you're downsizing and buying it out. Because the only, yeah, exactly, because it's like the only people who make out is if you have a high mortgage to sell high because the market's high. So if you sell high and buy high, that's okay, but your mortgage rate now has to balance out too.
There you go.
So there's like so many factors that you kind of have to look at to see if it's a good decision.
Yep.
Even though we're in agreement that your house is not an investment.
Yes.
I think that's going to hurt a lot of people though.
You know, it's funny too because I talked to my mom. My mom still lives on her own in our family home. She's been there for like 56 years or something like that. And I think back then it absolutely was. Like I think my parents bought their house for $16,000, and now it's probably worth $300,000 or close to it. Probably. I mean, I don't think we'll ever see that kind of rate of return on a home.
No, because
anywhere in the last like 5 years going forward.
Yeah, if you bought a $300,000 house in 30 years, you're telling me it's going to be $1 million. Like I don't even know what that percentage from 16 to 300 is, but like 300, you'd have to be in the millions. Right. I know we have crazy inflation, but like that would be not good.
Like, maybe you'd get to $1 million. Are you going to get to 4 or 5 million? I don't think so.
Yeah, and you're stuck living in that house. You can't change states. You can't change locations. So if you plan on staying in the same area for at least 20 years, odds are you're going to make out. It is a decent investment. But if you're not staying there for at least 20 years, you don't know what could happen. And also you could have like we had in 2008, where it didn't matter when you bought. I'm sure people who bought in the 90s weren't doing good in 2008 when things collapsed. You couldn't sell shit.
Yeah, it took a while for it to turn, for sure.
Would you say real estate investing is easy?
Easy? Absolutely not.
Because 2020, anybody you talk to, up till now it's not as much, but 2020, 2021, 2022, 23 it slowed down. It was getting houses, becoming a landlord, renting houses is super easy. Everybody should do it. It's passive income.
Yeah. How long ago was it when they were saying the same thing about crypto? I used to see guys every day on TV, Facebook, whatever it may be. You see guys talking about I made this in crypto, I made this. Now, church mice. You don't hear anything about it. Which I still think there's a future for
like Bitcoin.
blockchain technology and crypto, but it's not hot like it was. It was that was easy money. So the older you get, and the longer you've been in any kind of investing game, you start realizing this stuff that hey, this is going to be short lived. Don't think it's going to capitalize on it. Work your butt off during that time, make as much as you can, but don't think it's just going to last.
So since it's not easy, what kind of tell us about an issue you've had with one of your tenants or something, just so people understand, like, one of the bad stories, one of the things you're like, holy shit, this happened.
Yeah. There's plenty of those.
Yeah, just one.
I mean, we actually, some of the multi-unit properties we literally bought knowing there was problem tenants, but that's how we got pretty good deals on them. So it took time to either get them evicted, going in, finding the place trashed, or believe it or not, one of the benefits of all this stuff happening and values going like this and rents going like this, we found that some of these people that were in there had been in there for a while. They were paying really low rent, so of course we wanted to go so that we could get in, rehab the unit, and then charge a higher rent. But what we found is by the time it came time to evicting them, and you go to court, and they owed $4,000 of back rent, and they were paying $750 a month. All of a sudden they came up with the money because they realized, where am I going to go? I'm at $750 a month. You can't rent anything for that. Then they end up paying and staying, and it's hard to say no when they're going to give you the money for them to stay for a little while. Sometimes I say we should have said no anyway, but
So was that kind of your choice at that point? I've never
yeah.
had to evict anybody yet, but
depends on where it is and what judge you have and all. But yeah, for the most part, you should be able to make the choice at that point if they haven't lived up to the criteria. But it's not easy.
especially, do you have properties in just New Jersey or multiple states?
Right now, just Jersey.
Okay.
Yeah.
So how is the eviction process in New Jersey?
Brutal. Expensive, takes time. We use a property management company and they have an attorney, so that really is helpful. Versus that's another thing, like when you try and do this stuff on your own and save money and you don't know what you're doing, you can really get into an ugly situation. My theory is always, make sure that you're completely, grilling and scouring the tenants as they're going into these units, because that's the most important part of the process. Don't put someone in that you were hesitant or have, reservations over. Better to wait and get the one that you're more comfortable with. You never know when someone's going to lose their job or situations are going to have a health issue, whatever it may be. But if somebody's got bad credit for the most part, there's a reason why. And that's not always necessarily lower scores, because lower scores doesn't always mean terrible credit. But it's easy to look at a credit report that tells a story and determine, hey, this guy's never paid anybody, or hey, this guy just doesn't know how to maintain his credit. He just doesn't really have any credit, so the score stinks. But his last landlord said he always paid, his rent on time. He owns his car free and clear, so he's semi-responsible. He just doesn't really have the credit scores that you want.
And then how do you make sure, though, I mean, I guess you really can't, that the person you're talking to is actually the landlord? What if you make a call and it's just his friend answering the phone saying, unless you have like an actual property management company, like you can look up the building and all that, but if it's just a regular landlord, there's no way to really...
Yeah, I mean, there's things like Turbo 10 and stuff like that where you could do background checks. It'll show up if there's evictions, if there's bankruptcies for or whatever it may be. If there, or criminal record as well, which to me is important because that tells you some things. So yeah, there are things you can do to check as much of that stuff as possible.
But you still, somebody's going to get through the cracks, especially if you have enough properties. Somebody's going to get you at some point.
Yeah.
You don't mind buying a building that's filled with tenants that you might have to get rid of?
No, but depends on exactly how many that is. Like meaning, all right, so we have 8 units. We have 2 of them that are a problem, 2 that are behind, but they're not a real problem. We literally have almost enough already from day one to cash flow and to still cover the mortgage. That's where you say, yeah, I'm willing to do that because we're going to get a good deal on this. And when I get those people either evicted or turned around and paying, we're going to be sitting in a pretty good situation.
But you wouldn't buy it, I guess, if half the building wasn't paying and you weren't going to cash flow, unless they were going to make a cash flow with the 4 tenants that you kind of had. You kind of make sure you're good.
In other words, at what price, right? So like, hey, yeah, I'll buy it, but at this price, because here it still cash flows. But I'm not going to pay you with the hope that, I'm going to get all these people out, I'm going to get all those units rehabbed, and it's going to be great. Well, yeah, but you don't want to go belly up while you're doing all that stuff because that stuff costs money and takes time.
So you're buying it for current cash flow that you're actually getting, and you want to make sure that they're actually getting it right, kind of.
Yep, if you can.
So do you like multifamily or single family better?
Prefer multi, for sure.
Multi, why?
Well, it's just, your per door cost is just way lower. So you can still rent it out at market and your per door cost is always going to be better on a multi-unit than it is buying, I can buy an 8-unit, multifamily way cheaper per door than you could go buy 8 single family homes. I might not get the appreciation you do on singles, but my per door cost is going to be lower and I'm going to cash flow more than you almost.
And you're only getting one mortgage, right?
Exactly.
So how hard is it to get a mortgage if you're just getting started in commercial real estate, if you're trying to get into multifamily?
It's not easy. You certainly need to have decent credit. They really like you to have experience. So that's where it can be tough for somebody starting off to go to a bank and say, well, I want to get one of these loans. And they say, all right, do you own any other properties? Well, no, this is my first one. Be a little tougher, which is why a lot of times I'll tell people, make that your primary residence. Make that your first home purchase. Go buy a 3-unit, a 4-unit as your primary move-in. Learn a little bit about investing in real estate and managing a property. And then eventually you move on.
Because you can buy up to 4 units, correct? 4 units as your primary
4
residence.
units says it with residential financing, yeah. And now they've kind of changed it back. There used to be where you could buy with less money down, then they changed it, now they've changed it back. where you could still get in with minimum money down on those properties. Whereas for a while there, they were kind of just treating them strictly like investment properties where you got to put 20-25% down.
Now, do you like you sound like you use a property manager, correct? You don't like to manage them yourself at all.
We do both.
Okay.
So, like I have a trailer park that we own. We manage that ourselves, and then we have 3 mixed-use properties that we manage as well. The commercial side of them, we let them manage the residential units. And really, it's just a matter of time. Some of it is expertise, and again, I recommend it if you're just starting off. But even when you know what to do, you're like, I don't have time to be doing COs and collecting rents and repairs and all that stuff. I know guys that do that. God bless them. I don't know how they do it. But it also depends on what your other job is. How much stuff do you have going on? What's your family life? Do you want to be going out and fixing a sink? And do you have time to do that to save what little bit it costs? I mean, usually it's like 10% on average, right? To us, that was money well spent, and especially with the advice we get and the support we get from them.
So you look at too as the investment of you're getting support from them. They handle all the evictions, they handle any repairs. Now, how do you kind of manage them to make sure that they're getting the right tenants, and then also they're doing the right fixes and not overcharging you like $600 for a sink repair or something like that?
Yeah, well, that's definitely part of the game, right? So you're right. You can't just pay them and think that everything's great. You have to be looking at all that stuff and managing that stuff as well, and beat them up, negotiating them, whatever it may be, on those things to make sure that they're not taking advantage of you.
So tell me about the trailer park.
Trailer park's awesome. Probably going to be our best investment. So we bought that about 2.5 years ago.
Where'd the deal come from?
Came from a realtor that we have utilized. He's down in Vineland, Carlo Drogo. It's great. We've used Carlo, and he's found a bunch of these for us, but he kind of just heard about it. It wasn't even listed for sale. Heard that the guy might be looking to sell. It's a private owner, one guy. He was older, wanted to get out. We really negotiated with him probably for the better part of a year to put it together, and then we actually had real problems getting financing because nobody wants to do them. We thought we were going to be able to get an SBA loan, and it turned out you couldn't do it because of the fact they really want almost like they want it to be really like an RV park where people are coming in for like a day or 2 days and they're out there and they're paying a fee. They didn't want something where people was really long-term tenants and stuff like that, or seasonal tenants. So we couldn't get an SBA loan, so we ended up convincing him to finance it personally. We did a deal with him that would really limit the taxes he would have to pay on the sale, and it worked out great, and we locked in for 20 years at 5%.
With seller financing. Because that's something too that I feel like now is going to be pretty interesting to try and use with people who've owned the building, paid it off, have some equity, to go to them and be like, hey, look, I'll pay you over the next 20, 30 years. Yeah, it's 4%, but it's 4% you're guaranteed to get. On top of that, the tax implications work out better for you too, because you're not getting it all in one lump sum.
Absolutely. And a lot of those guys that have owned those properties for years are saying, I got no problem doing that. I don't really need the cash. So I'll take a nice rate of return, save on the taxes, and you take all the hassle away from me. So it's kind of almost like he still owns it, but he doesn't have to deal with anything.
So how does the trailer park work? You own the whole thing in the land.
So yeah, we own all the land and we just rent lots. So that was kind of the beauty of it. We don't own any of the trailers. So we've got all kinds of stuff in there. We've got campers, we got RVs, we got fifth wheels, we got single wides. We've total 36 units in there. And we basically maintain the well and the septic and the electric, along with grading and things like that of lots and stuff. But it's going to be a good one. We really
you have to take care of because you're basically like the city, so to speak. You have to take care of trash, water, lighting. How does lighting work?
Yeah, you got to put in lighting. We put in a dumpster, all that stuff. So it's certainly not easy, but at least you're not fixing everybody's trailers and stuff like that in there. So.
Yeah, you don't have to worry about that at all. Whatever they put there is on them. Now, is there some kind of something to make sure that they don't put something really like a crappy trailer, like scraps and junk and all that in there?
Yeah, I mean, a lot of parks have rules for the age of the trailer and stuff like that. We've been a little bit relaxed in that, hey, as long as it's presentable, we make sure that we don't put stuff in there that's just junk. But I have no problem with something that's older that still looks good.
Yeah, as long as it's, because you don't want like cars all over and all types of things like that. You want to make sure everything's clean, tidy, so that when people come in.
Some people do a better job of that than others, but it's part of the deal.
Yeah, it's hard to kind of maintain and manage everyone.
Yeah, well, it's tough. No, we have guys that help us, which has been
Yeah.
awesome. A couple of tenants that are either handy or just really care about the park, so they help us, and we kind of help them out because we're both, not really close by to it. So that's worked out pretty well. Guys helping us. We just had to winterize the well and stuff here for the winter because the pipes are too shallow. We're in the middle of converting to city water. We're hoping that the whole town's going to be converting soon to city sewer, which would be huge for us to get rid of the old, because we have 12 septic systems.
I was gonna say there's got to be a lot of septics there.
12, which are old, so we're
And not
definitely,
cheap.
we're definitely looking for, we don't want to be replacing them, so we cannot wait to get those converted. I mean, it's just all betters the park as well.
That's interesting. Once you said that you had a trailer park, I was like, that's super interesting.
Yeah, I mean, we certainly weren't looking for it. If you talk to any, fairly avid real estate investor, they actually know that trailer parks are a really good one. We've definitely been approached by people that are already telling us, hey, once you get all that stuff done, let us know, we want to buy it. But we really think that although the park really does cash flow now and is going to cash flow even better as we continue to do all the stuff we're doing, we really think the land value down there, because we're right across from the open bay. We have sunset views and beaches. When they put in city sewer and stuff, you're going to start having, we think, a little bit more commercial and things coming in. And we think valuations are going to be up to the point that, who knows, we could be, exiting the trailer park business and putting houses on those lots down there, because it's really spread out on like 6 different lots I think we have.
So the kind of plan is just hold, make money, and see what happens as time goes on.
There you go.
Now, if somebody is still interested in buying now, we kind of talked about where things are going. Obviously, nobody really knows, but if they're still interested in buying, is there any interesting programs that are new, or is there any grants out there that people can look at to buy if they're still going to buy?
Yeah, I just put somebody in one today. There's a great program that we have that a lot of other lenders out there don't have, where it's a conventional loan at a better rate and pricing that we would typically get on a standard conventional loan. And you get a $3,000 grant, just basically handed to you with no limitations, which is pretty cool.
Who's the grant from?
It's really coming through Freddie.
Okay.
This particular one is through Freddie Mac. And we actually have to front half of it and then they reimburse us, whatever, but ultimately it's all coming from them. It's just something to promote homeownership for first time home buyers.
Yeah, because there's always a different program. You just have to talk to the right mortgage broker to make sure that. So when somebody's looking for a mortgage, I always tell them to talk to 3 people. Does that make sense to you? Talk to 3 different brokers just to make sure that nobody's hitting you with some fees up front.
I would say it depends.
Yeah.
It depends on who they're talking to. I mean, there's certainly no harm in that, but sometimes you end up getting bad information from them, then you're going, all right, well, now I don't even know who to believe. So to me, I say, take advice from someone that knows what they're doing. Meaning, if you said, hey, I know a guy and he's great, you don't need to look any further. If you talk to a financial advisor or your accountant or a realtor that you've known for 10 years that says, look, I got a great guy, you won't need to look any further, he'll take care of you, then I think you're fine. If you really don't have any of those kind of relationships, it certainly doesn't hurt to talk to a few people.
Yeah, I'd still at least talk to 2 people just to be sure. You just never know now.
Sure.
Somebody might be hitting you with a $2,000 fee up front that the other person isn't hitting you with.
It doesn't hurt. No different than shopping for a car or something else, right? I mean, you're going to talk to one guy and just buy the car. Maybe, but it certainly doesn't hurt to look at a couple of them, talk to a couple of different dealerships and a couple of different salespeople.
Yeah, you're always better off, and then you'll feel better about the deal moving forward. And it doesn't mean sometimes you don't mind paying that extra $1,000 because, say, we have a conversation about a mortgage and I talk to someone else and they're giving me a better deal, but it takes him a week to get back to me. He's not following through with anything. Then obviously, if I want to get the house, I want to talk to you.
Yeah.
So that's why it's good too. I know what I'm getting once I talk to 2 different people.
Yeah, there's no doubt about it. I mean, you have all these online lenders and stuff, and sometimes they can be aggressive with their pricing, but you're getting what you pay for.
You have no support, especially if you want to close in
You
30,
get
60
no
days.
experience, no expertise, no support. Are they going to talk to you at 8 o'clock at night, at 7 o'clock in the morning, on a Sunday morning? Are they going to do all those things for you? That's why I always tell you, my job is not to get you the mortgage. That's the easy part. That's a given. Don't worry about that. We're going to get the mortgage. My job is to make you go through this process and be completely comfortable from beginning to end. And at the end, say that was a really good experience for me. And I'm not going to tell you it's going to be stress-free because it's certainly not easy these days buying a house. But as little stress as possible is what I try to make it.
Have you seen a mass exodus from mortgage industry, from mortgage brokers and stuff like that?
No.
No.
I think we've seen some, but certainly not a mass exodus.
Because real estate, I don't even know the percentage, but same thing. COVID, everybody became a real estate agent, real estate investor, and I feel like the agents are going way down. Nobody's
Yeah,
posting
I
anything.
think I heard recently that about 20% have exited. But then again, you say you could still be a realtor, but I can tell you what has happened. A lot of them have went and got part-time jobs or full-time jobs.
Yeah.
So they don't throw away their license, which would be foolish. To me, if it is tough times, I have no problem with doing that. To me, that makes sense. You can't always just commit to, it depends on what your home life situation is. If you have another spouse that works full-time, maybe you can get away with that. But otherwise, you may starve to death in the process trying to stick it out no matter how hard you work. So I get it. And that's probably, some of that's probably happened on our side as well. I haven't really heard any percentages though.
No, okay.
Part of me sometimes wishes it would.
Yeah. It's always good to have less competition. There's nothing wrong with that.
Yeah, no doubt.
All right. Thank you for your time, Sam. I appreciate it.